Trending Thursday is all about looking at stocks that are making the news. We analyze the stocks in VectorVest. We look at them and we help to corroborate or decorroborate the story. Is decorroborate a good word? No? I like it. Huh? If that's a Glenism now, decorroborate. To decorroborate the story. Now that you got an understanding of what we do here, we're going to look at some stories in the news, and then I'm also going to take you through, as a VectorVest subscriber, how you can always stay on top of what's trending. All right, that's something that you guys can do. I use this methodology to help to find out the stocks that are making the news for the Trending Thursday, but I'm going to help you to stay on top of what's trending at all given times. Joey is mad whack. Brian is just talking bad about you, that's all. Michael says, give Joey a hug on the screen. Joey will never come on screen. Joey won't come on screen. So that's his prerogative. He's like Bobby Brown. That's his prerogative. All right, first thing we're always going to... Go ahead, Joey, sing it.
It's my prerogative.
Okay, there you go. He just saying his prerogative. First thing we always do, we check to see what's going on in the market. So, when you open up the software and you come to the VectorVest home screen, this is the home page of the VectorVest software. It's laid out, we always call it laid out like the front page of your local newspaper, where market timing is always the headline story. So, we can see currently, right now, that our color guard is somewhat bullish. VectorVest not only tells you what's going on in the market, we give you guidance as to what's going on in the market as well. VectorVest right now does advocate buying safe undervalued stocks that are rising in price at this time. We're one of the only software out there that not only tells you what's going on in the market, but we do give you guidance depending on how you invest in the market. Here's our color guard. Our color guard is our traffic light into the market, by way of how many green lights, yellow lights, or red lights you have within it. We can clearly see we've got more green lights than anything. The market is showing more signs of being bullish than anything else. So you pay attention to that and you play the market accordingly. Our trend column shows us a short-term trend, which is the primary wave, and an intermediate trend called the underlying trend of the market, or the MTI. We're in an up situation across the board for the last 6 days. The slowest, most conservative call we have is the confirmed call. We are still currently in a confirmed up call. We've got more of a bullish feel in the market. I asked this question, I have been asking this question for the past couple of months. What are the two things that are moving the market? All right, moving the market, but they're political. What are the two things? Well, one is political. No, they're both pertaining to the market. What are the two things that are moving the market? The peso is rising. That's in Mexico. What does that got to do with me? No, it's not what I'm saying, Jake. What are the two things that are moving the market? There you go. That's one of them. The trade deal. What else is moving the market besides the trade deal? Not tweets. Tweets are moving the market, but that's not the answer I'm looking for. What's the other thing that's moving beside the trade deal? I'm going to use my Duke cup while you're answering questions. That's for you, Rich. Go North Carolina. Trade and Brexit. Jerry, it's not Brexit. Brexit is a smaller part that could be affecting us, but not it. China deal is one. What's the second one? What's one of the three things that move markets? Earnings, interest, and what? Inflation. There we go. What is this? There, not earnings, Christian. Still another something that I'm looking for. And what does the Fed talk about? There you go. It's the Fed talking about what? So we got the China deal and we got the Fed talking about what? How about interest? How about the interest rates? All right, so those are the two things. More buyers and sellers. Oh, no, you got not the recession. Recession, nobody says we're getting into a recession yet. Supply, demand. All right, here we go. Let's talk about the other two things that are moving the market. Let's get into my stories. Let's start there. All right, so in regards to the trade deal, Mnuchin confident the U.S.-China will sign the deal next month. So as you know, we are in phase one of the China deal, where China is saying that they're going to buy more of our farm, especially soybeans, and they were going to work on some things as part of the deal as well. The Treasury Secretary, Steve Mnuchin, tells CNBC's David Faber that he's very confident the U.S. and China will sign a phase one trade deal in early January. That's big, and that's big for the market. So this trade deal that's been in the works probably for the last 2 years, all right, is now coming to fruition, and that's going to be not only good for the economy, but good for the market. These things, for the most part, are supposed to be good for the economy, but they are bleeding over into what's going on in the market. It's just going through what I consider to be a technical legal scrub, and we'll be releasing the document and signing it in the beginning of January. So that's one of them, all right, the trade deal. The next thing that's moving the market is the Fed and what they're going to do with interest rates. If they raise or lower interest rates, it does move the market. Well, that's one of the big three things that move markets globally. Earnings, interest, and inflation. Earnings is the good guys. As long as companies are making money and earnings are on the rise, we will be in a bull market. But interest and inflation are the bad guys. The Goldilocks scenario. Earnings is moving up, but interest and inflation are moving down. That is the pristine economy scenario. Now, in this case, interest rates are still at historic lows. That's a good thing. Inflation, no matter what anybody's telling you, things are starting to pick up in price. Inflation is starting to move up. The Fed still says that it's still well within their target range to not affect rates yet. Because when inflation gets to be an issue, what do? You start raising the interest rates to start to stave off a rampant an economy that's starting to run. When the economy is starting to run, people can charge more money for stuff. Inflation becomes an issue. So what do? You raise the interest rates to stave off an economy that's rock and rolling. When the economy is all jacked up and you need to stimulate it, what do? You lower interest rates. Well, we've been lowering interest rates, even though in my personal opinion, we didn't need to because the economy is doing well. Well, what's the Fed's job? The Fed's job is to look at inflation and also to check the job market. We are at historical low rates for unemployment. So the job market overall looks good. Inflation, they're saying, is still within the range, their target range, before they have to do anything with interest rates. So if all of that is the case, we shouldn't have been reducing interest rates the way that we have. But let me tell you why we were. Because globally, other countries are looking at a possibility of a recession. We're one of the few that are not in that category, and that's because we have a thriving economy. Why? Because interest rates are still so low. So keeping our interest rates low, keeping our economy the best amongst the others in the globe are making us look like we're way ahead of the curve. But the president and other people along the same lines are saying, we need to lower the interest rates even to a 0 or below. Man, ask Japan. How well did that work out? All right. I never thought it would be in my time that we would ever see anybody say that we need to have 0 or negative interest rates. Well, nonetheless, the interest rates, whether they move up or move down, are a big part of the news that moves the market, but it's one of the three things in our economy that will move the economy. New York Fed's Williams says it would take a material change in the economy for the Fed to adjust its stance. Right now, they're on a wait-and-see path, all right? Another Fed, Richmond Fed, President Barkin says he could assess outlook on interest rates after the trade deal. So depending on what's going on with the trade deal could make a big difference in what the Fed does with the interest rates. So the two things that are making headlines is that's controlling the market, the trade deal we just took a look at in the news, and two Fed chiefs, the Richmond Fed president and the New York Fed chief, talking about their stances on interest rates. So it looks like right now, interest rates will stay put unless something really, 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 really big happens. How Jay Powell needs, you think that Jay Powell needs a Snickers now? Yes, he does, because he's hangry, he says. Wow. All right, so let's go look at two indicators within the software. I did it again. Two indicators within, let me just do it this way. I'll leave that alone. And let's go to the VectorVest software. We're going to look at a couple of indicators that we track the market with. Well, everybody knows about the spiders, all right? And we're going to also take a look at the VectorVest Composite. Let's take a look at them on a graph. So we understand what's going on. The trade deal is good for the market. We can look at the spiders, the S&P 500, the index on that. Look at that. Market's running up over the last year. A new high was hit today on the S&P 500. I think that if I put on the last 10 years, I think overall We're hitting historical new highs. Look at the S&P 500 over the last, since 2010. Wow, Kev says I look so fresh and clean. That's because of Joey. Joey makes sure I do that. All right, so look at the S&P 500. Remember, it only looks at 500 stocks, though. I'm going to change this to the VectorVest Composite, which looks at the movement of over 8,200 stocks. This is the indicator that we use to time the market. But look at it, running up just like the S&P 500 is doing. So the two things that are most worrisome in the market right now, the Fed rate and what's going on with the China deal, the market is still rocking and rolling. So if I'm looking to buy stocks, now is still a good time. Look at this run up since October of this year. Look at the nice run up on the VectorVest Composite. If I go back to the October of this year on the S&P, look at them both running. The market is in good form right now. But let me show you something else. And if you're not a VectorVest subscriber, you won't get this information. I'm going to put on an indicator known as the MTI, or market timing indicator. I'm going to go to add parameter, capital appreciation. I can't do it here. I got to do it on the market timing graph. I'm going to add a new graph, and I'm going to put it on the market timing graph. There we go. And now I'm going to put on the MTI. This is what we call the underlying trend of the market, and it is cast on a scale between 0 and 2. But when this indicator, let me put up the area, once this indicator gets to a level of about 1.5 to 1.6, the market is at a point where it's starting to look for a top. That happened back here too. Notice back in February earlier this year, the MTI was close to that level of looking for a top. All right, what was the MTI? About 1.61. It took a minute before it did fall, or soon after it did fall right here. It fell again, but the bigger fall happened here when the MTI did go below the value of 1, when the underlying trend of the market went down. But this is a good heads-up indicator prior to a market pulling back. We're at that level again. Notice that when we got to these levels, the MTI wasn't up there, but look at that run up on the MTI. The market is getting to a point where it's probably getting tired. As a VectorVest subscriber, again, this is great heads-up information. All right, so being that as it may, nice run up, but the market is getting to a point where it's starting to look for a top. You just keep that in the back of your mind. Joff says, when America is at a stage, the banker robber barons of old need to be paid to take and hold our money. We are in really bad shape, mentally and physically. Well, when is the time that we start putting money in the bank? When interest rates are high. Right now, the interest rates are low. Where are people putting the money? They're putting their money in the market. And a lot of them are doing it begrudgingly because they don't want to be in the market, but there's no other place for you to grow your money. Money goes where money grows. The money's got a better chance of growing in the stock market than it has in the bank. Thank you for taking the time to watch this video. Now, if you're new to the software or would like refresher information about the software, click on this Getting Started video right here. Thanks to all of your input, here's a YouTube video that we think would be perfect for you. Click right here. If nothing else, folks, just hit the subscribe button right here.